Okay, so here we go with sale market area. And what this is something that is quite common in the currency market, that because of changes in the macroeconomics and interest rates, sometimes the currency is just have more power than the other. And the entire year is just basically trading under sale market area. So just that's all it's doing, is just shorting the area without any sort of change from sellers to buyers. So these market areas will start under macroeconomic changes and conditions. Buyers are no longer part of the life of an instrument and only take few chances and opportunities. I mean, the buyers only takes a few chances and opportunities on the instrument. Sellers are under control of the price market activity and therefore no open interest. And this is a very important key because we're going to talk about open interest in the next video. And there's a huge concept that some traders I'm not able to identify, I'm not able to see it. And if you know what it is, it's so much easier to see how the market will behave the next day and how you can take advantage from the actual trading session for the next one. So let's give an example of what a short market area is, and that will be the basically euro dollar. Okay, so euro dollar situation after the war of Ukraine and Russia. Before the war, as you have seen, the euro was trading at the 113.40, 113.30 against the dollar. And that was actually the levels into buy market area. Above 110 is the market area. So the euro was into just pushing higher. Buyers were totally cool with the euro back then. And then after the war, the euro dollar jumped below the 110, and that was only for the seller. Even though we knew from price action that you only have to short the euro, we saw many times tons of buyers because the euro dollar was actually doing new lows every time. And I said to my students, to my live trading sessions, we're not going to buy, you guys. It's in sale market area, and we don't know if the euro dollar is going to be doing this for the entire year, meaning 2023. And that's what happened. We were actually, I mean, from the beginning of the war, 2022, that was no even the case. The euro was always trading in sale market area. We do not know when this is going to recover. We don't know if the sell market area is going to jump to the buyer market area, but that is going to take a lot of changes in the macroeconomic situation and the recovery from the war. And that's not the case yet, because as today we are October 2023, and we don't have the euro not even close to 110. We still have the euro dollar at the 105. So on those days of actually those weeks of war, I talked to interviews and everything, and I said we are going to be shorting the euro as much as we can, as long as it takes, just because the buyers has nothing to do there, and the fact was that many traders saw the euro trading at the 101 with the dollar, and that was never seen before. And we traded the euro dollar at the 0.95, 0.94. And I say, you guys, I don't care. I mean, it's going to have the recovery is going to come, but I don't know if we're talking about buyers market area. So if we buy, because of course we did in a few trading sessions, but there has to be 100% on daily basis, because the market area, the sell market area has no open interest, meaning that if you buy one day, it's very difficult to hold the buy until the next day. Very difficult to identify that, because in the sell market area, the buyer are only taking just the opportunity of the day, and then they close the buy, and then boom, down again. And that's the behavior when the price is into sell market area. And the contrary, in the buyer market area, you have open interest. okay, which is the opposite. You have the buyer and keep pushing higher, keeps pushing higher. So you have the market holding their buys, and that means the next day you have more buyers, the next day more buyers, and the seller is only taking profits, you know, just maybe once a week, twice a week, whatever, but the seller is not part of the situation and the strategy of the instrument that we're talking about. So this is very important. We're going to talk about open interest in the next video, but the sell market area, it only applies for, I'm going to say currencies. I can also say silver. I can also say gold, probably oil. It has some very sell market area that you can easily identify those levels that the instrument is not valuable enough to have open interest for the next day. And in terms of the euro dollar, like I said, in the sell market area, the pound dollar is in the short market area as well. I can say gold below the 1900, also in seller's market area. Once it jumps gold to the 1900, then you can start considering the buy 100% buy strategy, and even holding buys one day to the next one. Okay, so this is a very interesting concept because, you know, like I said before, some of the markets are not trend markets. So the FX market and many other instruments, you have the areas where you know what strategy is more suitable for the day, because we're talking about intraday basis here. Except when we have open interest in buyer market areas, we are able to hold the buy from one day to the next one, except when we are in the sell market area, which indeed, of course, you can hold the sell, the short trade from one day to the next. Okay, when we are the short market area, we expect new lows. We expect the price to keep dropping even more. So I'm going to talk about open interest in the next video.